Hey, welcome back to another update of my dividend investing portfolio. So if you're new to the channel, I'm a Canadian investor, primarily buying dividend-paying stocks, everything so far on the Toronto Stock Exchange, and using Wealthsimple Trade to buy and sell the stocks. I use it because it has no fees, no trading fees, which is great because I'm only buying a couple stocks at a time, and I track everything in this custom Google sheet that I made. It gives me a little bit more insight into the performance of my portfolio and just helps me kind of keep track of things. So to get started, the stock value that's in my portfolio is around $51,250. There's $466 in cash, and I actually spent some of that earlier today, and I'll walk through exactly which stocks I bought. And you'll see at the end of this video that once I kind of update the sheet, that this number will drop. Basically, but up until now, the total gain loss is sitting around $3,600, which is around 7.5%, which is awesome. I think, of course, you could get better, or you could also get worse. But that's just, yeah, $3,600. That was just, most of it's unrealized gains. 488 of it came from dividends. The rest came from the stock price. But this is like the difference between my current balance and how much money I've actually put in myself. But anyways, like I said, most of the stocks I have pay a dividend. The average dividend yield is 4.07% right now. Pretty all right for me. It's a nice mixture of dividend growth and a couple high-paying ones like REITs and stuff like that. But basically, 4.07 on 51,250 is around $2,086 per year in annual passive income. So with dividends, you're going to get paid basically the dividends, cash awarded to you periodically, like every month or every 4 months usually, just because you hold the stock. So like the stock price will go up and down and whatever, but most of these companies will continue to pay this out. It's not guaranteed, but it's pretty likely, especially if you go with what's called blue chip stocks, which are basically like very reliable, companies with a long history of paying their dividends and stuff like that. So this isn't guaranteed, but you can pretty much rely on it most of the time. And then it ends up working out to about $173, almost $174 per month. So like I said, I'm going to come back to this at the end of the video. I'm going to buy some stocks. So actually, I already bought the stocks, but I'll just kind of walk you through what I did. And then we'll just double check here to see how much my annual dividend income has increased based on the activity that I made in my portfolio today. But before we get started, I actually know that there's a dividend in here that I haven't logged yet. So if we jump into Wealthsimple Trade, then I just go into the activity tab here and I just search for any dividends. You can really filter if you want. You can just straight up look for dividends, or you can kind of pick them out of the master list. But basically here, since the last video, I've got $1 from Severia. So I do need to track that in my dividends tab, which is down here. And basically just going to drop that in. It is TSESIS. And this was on August 12th, 2021, and I got $1 big in Canadian. So actually that's going to update some of this stuff. I guess at the beginning of the video I was off by $1, but now everything is up to date. But you also saw that I bought some stocks, so we'll update that as well. The thing about these spreadsheets is you actually have to put in some information every once in a while, basically after things happen in your account, and then it will basically just track things properly. So here's the portfolio. Let's take a quick look in here. Let's maybe sort it by percent of holding. You can see that mostly I'm real estate at the top, which is also reflected in the pie chart here, primarily real estate followed by utilities. Today today I already bought some more utility stocks, and so let's take a look at some of those. One of them was Algonquin Power. I was down a couple percent on these guys, and I'll show you the chart in Wealthsimple Trade. It basically dipped a little bit, or just went down, and I thought that's cool. I'm going to reduce my average price ever so slightly. Now that I've got a few $1,000s in here, if I buy 1 or 2 stocks, it doesn't really change my average price much, but still, it's a step in the right direction, depending on how you look at it. The other one that I picked up was Northland Power. They dropped quite a lot in this last week, and I'm definitely in the red on those guys as of recently, and I thought, you know what, down 6% or 7%, whatever, I'm going to jump on that and just add it in. My whole position was like still under $1,000 with them, so I thought, yeah, they're in about the middle of my account, and I don't mind. I'm really trying to build up my positions that are further down in this list. But another one that I did pick up as well was TransAlta Renewables. So I'm still in the green with them. I bought in like a little bit earlier, so I have been doing all right performance-wise, but their chart actually went down based, with the recent prices, and I thought, I'm going to jump on that too. Today was just basically a utilities day for me, and yeah, so let's jump into Wealthsimple Trade again and take a look at some of them. So the first one that I mentioned was AQN. So you can see here they're pretty much flat in the day, but if you look in the last week, they're down 3%. And in the last month, they're doing all right, and they just have kind of dropped. And whether or not this is temporary or permanent, it's still, in this case, below my average price. And so I thought, yeah, that's cool. I'll just buy into that. You can kind of see the idea here. what's going on. It doesn't even really show up here, but we've just kind of dropped off there in the last little bit. The other one was Northland Power. They've got a very similar thing going on. They're actually far above the pre-pandemic levels. You can see here right at the end, it just drops off a little bit. We can zoom in a little bit more and see everything's going fine, and then boom, down. Down 5% in the last month, 7% in the last week. Yeah, anyways, that's a buying opportunity for me. That's how I see it. So I picked up those, and then TransAlta Renewables, which is right here. Got the same thing going on, just utilities getting smashed left, right, and center. Yeah, just quite drastic. And these guys, I bought in like somewhere around here, so I'm doing pretty well, I think. Anyways, but I just like to take advantage of these drops as they do happen. And these are all companies that I'm totally comfortable with holding long term, and don't believe that this is like going to be the immediate end of them forever. So I'm cool with that. But yeah, let's take a look here at the buys. So today, like I said, I bought AQN, just 4 shares. It was around $80 of AQN. I put in about $80 into Northland Power, and then about $200 into TransAlta Renewables. So what I do with this information is I take the number of shares and the actual share price, and I bring it back in to the Google Sheet, and then I drop into the Transactions tab, and here I just log exactly that information, and I just double check that it is exactly correct. And once that's all in, then I just drop back in to double check, how much the annual dividend income has increased by. And if you remember at the beginning of the video, we were sitting around $2,086. It was almost $2,087. Now up to $2,101. So that's an increase of around like $13 or $14 per year, which again might not sound like a lot. But if it's increasing by, $10 to $15 or something every time I make a deposit, and then I'm reinvesting this $2,000 every year to buy more dividend-paying stocks, and this number is growing as the companies naturally grow their yield, we really start to see the effect of compounding growth and the dividend snowball effect. So I'm super hyped that this is over $2,100 now, and at some point I'm going to hit $2,500 and $3,000 and so on and so on. It's a slow growth. It's not that exciting with dividends, but you get a lot of momentum when you invest this way. And like I said, this isn't guaranteed that you'll always get this, but it's pretty reliable. As you can see, a lot of these companies in my portfolio are blue chip companies. They're big companies that you've heard of, Canadian banks, Canadian utility companies, like all sorts of stuff, TELUS, whatever. These companies probably aren't going anywhere anytime soon, so we'll be able to rely on this income. And also probably some of the stock price appreciation, in a long time into the future. So anyways, if you're still with me, if you watched this far, thank you so much. I really appreciate it. Yeah, let me know what you think down in the comments. If you are investing in dividend paying stocks, or if maybe you're using the spreadsheet, yeah, just let me know. Drop down a comment. I always love chatting with you guys down there. And yeah, take it easy. Have a great weekend, and I will come back and see you next week.